Hello. Yes, good afternoon, everybody. I hope you can hear my voice and also see my screen clearly. Today is 13th. This is 13th of October, 2021. So today's webinar, basically, we just want to look at some simple tricks that if you are doing daily trading, then they may be of great use to you. So it could be a strategy for you. If you're looking for a strategy, then this may be just a good session for you. If you want to learn more, especially how to trade intraday, then this is a webinar for you. So the first thing, anytime you have your charts like this, maybe you have a daily chart, you have the 1 minute chart, or whichever charts you're looking at, the first and the most important things to look at are the key levels. So focus mostly on the key levels first of all. Get the key levels on that symbol. So for example, if I'm looking at Euro USD right now, so I look at GBP USD instead. Assuming I'm looking at GBP USD, I'd like to trade this symbol. So the first thing I do is I want to see what's happening on a higher time frame first of all, before I look at what's happening on a lower time frame. So because our interest in this case is to be trading just intraday, which means trades which are opening during in the morning and closing just before the end of the day, or some trades which are opening some like for some minutes only or some seconds, and then we are out. To get the correct entry for any trade, you must first of all get key levels. So we'll go here, daily, and then let me remove, there's some things on my screen which are not useful for us now. So look at what's happening here. Look at this pattern here. Look at this. From this point, we can see that there is a bullish pin bar candle here. What this candle means is the next candle may likely continue to the upper side. So on this day, after the formation of this candle on the daily chart, you are supposed to be looking for buy positions. So when you buy it, you can see that the price actually went up. The next day, the price continued even higher, but ended up closing even red, another pin bar. So this pin bar now indicates that the price is likely heading to the lower side. So that means after this bearish pin bar now, the next candle is also a sell. But what has happened? The price actually gapped above, opened here, went as high as this point and as low as this point, but ended up closing at this point here, which is another bullish pin bar candle. So the next candle, which now opened here, went as high as this point, but ended up closing as below. So as I was saying, anytime it means, it looks like anytime there is a bullish pin bar or there is a bearish pin bar candle, the price tends to move that direction at least for some few minutes before eventually it returns to the other side. So like here we had a bearish pin bar candle. You can see that there's actually an opening here and the price went as low as this level here. It went as low as 35 pips points. So also the same thing happened here. You can see that the price opened here after this pin bar here, bullish pin bar, the price went as high as this point, which means there was a significant move in that direction before it came back and closed below. So look at all these tails from this point. This is the first tail, this is the next tail, and this is the other tail, and this is the final one which pushed price downwards. Which one amongst this is actually the longest? Of course, you can see that it's this one. So Whenever you're seeing tails forming on a higher time frame, on the same chart on a lesser time frame, you're supposed to be focusing on a trade in the direction of the tails. So if, for example, we do have a bearish pin bar here, like we had, this is a bearish pin bar candle with a very long tail, the next day we are supposed to be focusing on sell positions on a lesser time frame. So we could be doing maybe 30 minutes, 15 minutes, or even 5 minutes, but we're supposed to be focusing strictly on sell positions. So when this happens, when you see a bearish pin bar candle, then the next day, the next day after that day, you now go to lesser time frame, maybe 30 minutes, and then you look at what's happening. You are likely to see price pull back. Just a second, let me scroll to that place where we have that horizontal line. We have it here. So the previous day, this is the previous days, you can see that it opened somewhere here, it went as high as this point here, then it came back and closed below. So the next day you can see that the price actually attempted to come down, but it came back up to as high as this point here before eventually it went down. Okay, so how could you have entered this trade the next day? Because you can basically see that after this pin bar, we're supposed to go downwards, but instead the price pulls back to the upper side. So whenever this happens, whenever there's a pin bar, something like this may happen. You're likely to see price a formation like this, a move up. Just a second. So let me draw this clearly so that you're able to see exactly what I'm saying. We are likely to see price do that, and then continue up, and then continue down, and then pull back. It's like some how do you call it? It is like some head shoulder formation, some slanted head shoulder formation. So our job will be to mark this point here and also to mark this point here. So after this pin bar, this is the previous day, when you now see price moving to the upper side, look for a shape that looks like this. So trade when the price gets to inside within this area here, which means while the price is moving up, we're doing nothing, we are doing nothing, we are doing nothing, we are doing nothing, until when the price touches this point here is where we look for a sell position. So if the price comes down and then gets back to the same place, then this should be the correct place to look for a sell from. Does this make sense whatever I'm saying? So after this, after the retracement, we sell it. We didn't sell it because this is the signal candle. If the price pulls back, then we wait for price around this area here. So you can see if you sold it there, the price barely moved against you. It went down, continued even lower, and it gave us even more signals for a sell. We do have a signal here. We do have a signal. So this is a support, there's a move up, there's a break below, there's a pullback, so this is a sell. So basically this is how you look for trades on a higher time frame. So you look for that shape forming on that higher time frame. Like just recently we did have a candle which indicates a sell. Look at this candle here. There is a very good engulfing candle. So you mark it. This is an engulfing candle. You go to 30 minutes. Look at the same chart, the same thing which you had previously, the same formation, that is like the slanted head shoulder formation, is almost the same thing which is happening here. You can see it. We have that. There is a move down, then there is a correction, and then there is a move down. So you can see it here that in our case it's here. So basically this could have been the correct place, the correct zone to look for a sell from. If we were looking at this chart when this was happening, the next day this was the correct zone to look for a sell from. So you can see that after the engulfing candle, this day here is when we had the engulfing candle. We marked this high, we marked this low, then the next day the price actually came back and even touched that place. So this was the correct place to look for a sell from. This was the ideal place you could have taken a sell from. If you sell it there, your stop loss is fixed above this area here. Does that make sense what I'm saying? So basically the pattern is the same. If you're looking for a buy, you'd look for an inverted formation. So if you are looking for a buy instead of a sell, then the pattern will be different. So anytime you see a bullish pin bar or a bullish engulfing candle, you look for an inverted head and shoulder formation. Let's look at that. We'll get an example. Just a second, let's see what happens. So there are some cases where you may have everything lined up, but the price does not retrace back to the level where you want it to retrace up to. Like we may have this one here. This is a bullish pin bar candle. So the next day here we're supposed to look for a buy. Let's move to that candle on the 30-minute chart. Just a second. Let's see where we can get it. Still way back. Okay, so it looks like it's way back. So let's see when was this first, because we may be heading. This is September, 9th of September, and this is March, so we've gone way past 9th of September. Okay, so we have it here. So this is the previous day's candle. You can see that the price actually went down. It opened somewhere here, went as low as this point, then it came back up to this point, then it went down up to as low as that before it came back up to this point, then it continued down, and then it continued even higher. So basically, if I was looking at this chart now, then possibly I could have missed an opportunity here, because I could have had my lines drawn like this, something like this. Then I was now expecting that after this breakout, the price was supposed to pull back and come back to this level before it continues upwards. So unfortunately, that has not happened. The price has not moved anywhere close to what we wanted. So this was a bad case. It's not bad because entirely the price has respected the move we expected to the upper side, just that it has not pulled back down as we expected. So let's get another example for a buy. Okay, so you may think that this is the only strategy for a lesser time frame. No. If you can spot a very good double top on a 30-minute chart, or on a 5-minute chart, or on a 15-minute chart, and you are seeing the possibility that the trend is the same on a higher time frame, then you're supposed to look for that. Like for example, if you see two tops, not two two tops, that is, you have something like this. There's a move up, there's a move down, and then there is another move up, and then we do expect price to continue down. So if you can spot this on a lesser time frame, that's on maybe 1-minute chart, or 5-minute chart, or 15-minute chart, up to 1 hour, if you can spot this formation, and then you find that on the same chart on a higher time frame we are seeing some sell signal, then just go ahead and pick that sell. Go ahead and sell it when the price comes back and touches somewhere within this area here. Just pick a sell position, sell it instantly when the price gets to this point, expecting that sell to continue down at least up to 1.4300. Does that make sense what I've said? So basically those are some of the few things which I look at whenever I'm doing intraday trading. I look for inverted head and shoulder formation. I also look at tops and bottoms, inverted tops, inverted head and shoulder formation, and then I look for higher time frame that support the same thing. So if a higher time frame is giving me some clear direction, and then I find a formation which supports that one, with that chart which is on the higher time frame, I end up entering that trade. So thank you very much. This should bring us to the end of today's analysis. We'll meet again tomorrow at the same time. So thank you. See you.